Hello, welcome to News Wrap. I'm Vivian Akinyosui. First, we'll take a look at some stories that made the headlines last week. The Nigerian Midstream and Downstream Petroleum Regulatory Authority, NMDPRA, has awarded 25-year gas distribution licenses to 10 companies, marking a significant step in the country's gas expansion initiative. The announcement was made Tuesday in Abuja by NMDPRA's Chief Executive Officer, Hamed Farouk, who revealed that the awards followed a rigorous selection process out of 30 applications, with the top 10 companies chosen to drive the first phase of the initiative. Also, the governor of the Central Bank of Nigeria, Olayemi Cardoso, has revealed that without the bank's policy interventions, inflation in the country would have surged to 42.81% by December 2024. Speaking at the 2025 Monetary Policy Forum, which brought together ministers, heads of economic agencies, and private sector leaders, he also projected that diaspora remittances would rise to 31.79 trillion by the end of 2024. He emphasized that the CBN would continue to stick to orthodox monetary policies to control inflation in 2025. And over now to the Nigerian Exchange. The Nigerian Exchange Group, NGX, hosted the Executive Governor of Katsina State, Dr. Diko Umar Rada CON, Thursday, marking a key step in the state's efforts to drive economic growth through capital market opportunities. The visit underscored Katsina State's commitment to sustainable development, investment attraction, and financial inclusion. During the event, Dr. Umaru Kwairanga, chairman of the NGX Group, praised Governor Rada's administration for its forward-thinking policies, particularly highlighting the Katsina State Development Plan as a major initiative for structured growth. The visit also emphasized the critical role of the capital market in securing investment and long-term financing for infrastructure projects. The NGX Regulation Limited, NGX RegCo, and the Economic and Financial Crimes Commission, EFCC, have called for a strengthened partnership to enhance market surveillance to combat financial crimes in Nigeria's evolving digital capital market. This appeal for deeper collaboration was made during a meeting between NGX RegCo CEO Olufemi Shobanjo and EFCC's Executive Chairman Ola Olukoyede at the EFCC headquarters in Abuja Tuesday last week. And still on the capital market, the Securities and Exchange Commission, SEC, has pledged to strengthen its oversight of capital market operators to enhance regulatory compliance and boost investor confidence in Nigeria's financial markets. This commitment was made by SEC Director General Dr. Imomotimi Agama during the office launch of Noreen Berger Asset Management Limited and the 2025 Capital Market Outlook event in Abuja Monday. Dr. Agama emphasized the Commission's zero-tolerance policy for violations and outlined key initiatives, including a risk-based approach to supervision aimed at ensuring that market operators adhere to regulations and contribute to a more secure and transparent market environment. Still on the Nigerian Exchange, capital market analyst and CEO Arthur Stevens Asset Management, Olatunde Amolegbe, has advised investors to focus on equities in the first quarter of the year. He was speaking at a bi-monthly forum organized by the Capital Markets Association of Nigeria, CAMCAN, recently. The event had as its theme in-depth evaluation of the capital market in 2024 and prognosis for 2025.
If you look at the trading last year, it's an eventful one. Of course, the market closed at a 37 point, I think 5 or 4, if I'm correct. Compared to other years, the capital markets, where a lot of people have burned their fingers, but last year was a good one. And the reason why we are here is for us to throw more light, especially in 2025. so that some of us who have not taken position last year will do this year.
In recent times, the Nigerian capital market has seen significant changes in investment patterns as it seeks to attract more diverse participation and enhance market activity.
I show the data of our FX reserves. We've gone from about $34 billion to $40 billion. That is significant. I do not know the last time our reserves as a country has crossed that $40 billion mark, which means that the CBN has significant firepower to meet demand in that market. So that's a significant issue. Secondly, with some of the policies we are seeing, we continue to see liquidity come into that market, even from FPIs. So in as much as liquidity continues to improve in that space, it is expected that prices will stabilize and ultimately start to come down.
Speaking on the question of mid-level investors, he said they are more risk-tolerant than traditional participants as they are not only willing to trade but are also seeking to take strategic stakes in companies, aiming to drive internal changes and unlock hidden value.
We are seeing another set of investors coming into the market, and those set of investors appear to be investors that love risk a little bit more than the traditional investor we used to have in our market. All right, and they are willing to stake capital, not only to trade stocks, but possibly to have a leg in to some of these companies in order to make changes from the inside and bring out value that people have not been seeing. Some of them have not traded 100,000 shares in the last 5 years. Suddenly, in the last few months, they are trading millions of shares. All right? So it shows that another subset of investors have started coming into our market.
He cautions on the need to tread more carefully by doing due diligence before choosing where and what to invest in. And away from the Nigerian exchange, FBN Holdings PLC, the parent company of First Bank of Nigeria, has reported a remarkable 125% growth in earnings per share and overall profits for the first 9 months of 2024, reflecting its robust financial resilience. A key factor driving this performance was a substantial 165% surge in interest income, which soared to 1.6 trillion naira. This impressive growth highlights the company's strategic focus on long-term sustainability and its continued expansion in core banking and investment activities. Over the last 5 years, FBN Holdings has consistently demonstrated strong growth, quadrupling its earnings per share and cementing its position as one of Nigeria's fastest-growing companies. Meanwhile, Airtel Africa has reported strong financial and operational growth for the third quarter of 2024, underscoring its successful strategies in network expansion, customer experience, and financial inclusion. The company saw a notable 7.9% increase in its customer base, reaching 163.1 million, with a significant 13.8% rise in data customers to 71.4 million. Data usage per customer also surged by 32.3%, while smartphone penetration climbed to 44.2%. Ethiopian Airlines, Africa's largest carrier and one of the world's fastest growing airline brands, marked the Chinese New Year 2025 with a series of vibrant celebrations highlighting its dedication to fostering strong connections with the Chinese communities globally. Group CEO Ethiopian Airlines Mesfin Tassiu expressed the airline's commitment in strengthening global ties with China being a key destination in the airline's network spanning both passenger and cargo services. The airline sees China as an engine for future growth, noting the rise in the number of investors and business persons flying between China and Africa. Still on travels, the organizers of the Accra Wiso West African Travel Fair have announced the dates for the 8th edition of the Accra Wiso Travel Expo, set to take place Friday, 27 June 2025. The event will kick off with an exciting road trip adventure from Nigeria through Benin, Togo, and Ghana, running from 21st to 26th June. The Tour Operators Summit, held 27 June in Accra, Ghana, will focus on the theme Reimagining the ECOWAS Free Movement Protocol, providing a platform for West African tour operators to connect and network with prominent figures in travel, aviation, hospitality, and tourism across the region. Navigating 2025, the risk, opportunities, and the return of Nigeria's workforce amid global shifts. That's coming up right after this break. Welcome back. You're watching News Wrap on AV1 TV. As the United States ushers in a new presidential term, Nigeria's economic future faces pivotal shifts that could reshape its fiscal strategy. In 2025, finance and economic expert UgodreObi-Chukwu, CEO Nairametrics, speaking on the theme Nigeria's economic outlook for 2025 at a bi-monthly forum hosted by the Finance Correspondents Association of Nigeria, FICAN, highlighted the potential challenges and opportunities ahead, including the return of skilled workers to the country and the impact of global economic factors.
How can a country survive exchange rates from 900 to 18? Remember, it hit 18 at one point, 19 even. Go from fuel price from about 6 something to 1,001. Oh, was it as at last year? Yes. To 1,100. And all of them are they all right like this. They fresh. We never die. No fight. No protest. Nothing. Everybody's just okay. Saying that God, we're supposed to add down here.
A most engaging session with the Nairametrics boss and financial analyst UgodreObi-Chukwu, as he took participants at the forum through a summary of financial and economic highlights that shaped the year 2024. In his presentation, he explained that a stronger dollar combined with global interest rate hikes could lead to less capital flow into African economies such as Nigeria.
Most people believe that, especially those who believe the exchange rate, because I've also seen people who told me that the exchange rate would drop to 2002, 2004. And the reason why they believe it is this 13.8 trillion deficit. So in economics, countries that run fiscal deficits tend to always have exchange rate depreciation. You can't expect your exchange rate to be stable if you're running a fiscal deficit. Because when you run a fiscal deficit, you're essentially borrowing. So when you're borrowing, you're indirectly weakening your currency. And Nigeria has been running a fiscal deficit for the last 10 years. And this is the highest fiscal deficit in one single year that we're running.
According to him, this could make it more challenging for businesses to secure investments, expressing concern that the new U.S. leadership could affect vital trade agreements. A potential plot twist, he explained, is the likelihood of a dramatic GDP shift for Nigeria, a scenario where the Nigerian economy suddenly expands, boosting its GDP by a significant margin, perhaps reaching 500 trillion naira. He explained that if this were to happen, the country's debt to GDP ratio would drastically improve, potentially positioning Nigeria as one of the lowest in the world. Ugodre also noted that another critical development for Nigeria's economy in 2025 is the potential return of skilled workers who had previously left the country. The Japa phenomenon, where Nigerians immigrated abroad for better opportunities, has had a significant impact on sectors such as telecommunications, banking, and the oil industry. However, as global immigration policies tighten, many of these skilled workers, according to him, may begin to return, bringing their expertise back to Nigeria.
There's still a fallout of the people that left. A lot of the problems that you had with the banks last year was, I hope you know, was because of Japa. It wasn't because a lot of the people who were working on their deployment all left. So there was nobody to do a lot of the fixing. And so I think this is likely we will start to see some kind of change. And remember, back to the Obasanjo period, if you all remember very well, around midway into Obasanjo's 8-year tenure, a lot of Nigerians started coming back because all of a sudden Nigerian companies could now attract global talent and were paying. I think it's going to happen again. Check all these oil and gas assets that Seplat, Wando, who's going to operate them? Check out all these companies that have been acquired by all these Asian countries. Who's going to operate them? Remember, we still have NOTAP. We have our own. Nigeria actually has a very strong immigration policy too. So you're not going to have Oyibos come and dominate management. It's going to be Nigerians. So that is going to create opportunity for more people to come back.
As Nigeria anticipates the changes from global economic shifts, it also stands at the crossroads of potential growth and transformation. The return of skilled workers, coupled with strategic fiscal policies, could provide the country with the opportunity to redefine its economic future. And on the foreign scene, Asian stocks fell Friday as concerns about the impact of DeepSeek on the AI sector weighed heavily on South Korean chip makers. Key companies such as SK Hynix and Samsung Electronics saw declines following a broader sell-off in AI stocks, with Samsung reporting a smaller than expected profit in its chip division. Meanwhile, markets in mainland China, Hong Kong and Taiwan remain closed for the Lunar New Year holidays, and the dollar gained against most major currencies, while U.S. futures rose following strong results from Apple Incorporated. Oil prices rose on Friday as markets reacted to the threat of U.S. tariffs on Mexico and Canada, the two largest crude exporters to the U.S., which could take effect this weekend. Brent crude futures for March increased by 61 cents, reaching $77.48 per barrel, while the more active April contract rose by 48 cents to $76.37. And just before we go, a quick look at highlights from the trading floor of the Nigerian exchange. And that's it on News Wrap. Don't forget to join us same time next week on the same channel. I'm Vivian Akinyosi. Bye-bye.